Hi guys, this is Jason, certified financial planner and host of Fighting Words Financial, coming at you live from quarantine, just like everyone else on YouTube right now. Today I want to talk about the changes that the CARES Act or the COVID-19 Stimulus Act that just passed. I want to talk about the changes to your IRA and 401k distributions. This is going to be a huge benefit for you if you're unemployed, if the situation lasts a lot longer than we think. You're going to be able to take advantage of some of the changes to this law that can help you survive financially during this time. And I'm going to get started right now. Okay, welcome back guys. If this is your first time visiting our channel though, please hit the subscribe button. It does help us get seen by other people. All right, I'm going to jump right into it. The bill that just came out, the biggest benefit in it is that the bill waives the 10% early distribution penalty for coronavirus-related distributions for all of 2020. This applies to people who are under 59 and a half and need to take a withdrawal from either their IRA, their 401k, their 403b, or 457 plan. Now, this doesn't apply to defined benefits. Nothing changes about that, but it does apply to your defined contribution plans. So anything that you are contributing money to and maybe your employer matches, you're able to take withdrawals on that now without a 10% early withdrawal penalty. Now, it is still going to be taxed. In normal times, anyone under the age of 59 and a half would have to pay a 10% penalty on top of the taxes they're charged for those withdrawals. So qualified individuals now can withdraw up to $100,000 for what's called a CRD, or a coronavirus-related distribution, from an IRA, as well as their workplace plans like the 401k, 403b, and governmental 457 plans. So what's a qualifying individual? A qualifying individual is anyone diagnosed with COVID-19. A qualified individual is also someone who has a spouse or a dependent who is diagnosed with COVID-19. Now, the definition from here gets really, really broad, which tells me that they're probably planning to be very lenient when it comes to these withdrawals. So a qualified individual is also someone who experiences negative financial consequences as a result of being quarantined, furloughed, laid off, or having work hours reduced, unable to work because of a lack of childcare due to COVID-19, the closing or reducing hours of a business owned or operated by someone who gets COVID-19. Basically, everyone who's laid off right now essentially qualifies to take withdrawals from your IRA or your 401k or your 403b or 457 plan. You qualify to take withdrawals without paying this 10% penalty, because right now, basically, the 11 million people in the last 2 weeks that have filed for unemployment claims, you also qualify for this. You would not have otherwise been furloughed or laid off unless COVID-19 had come around. So, and in the next line in the law, they also say other factors as determined by the Treasury will determine who is a qualified person. This all leads me to believe that they're going to be really, really lenient about waiving this fee. And basically anyone who's unemployed or has hours reduced or is economically impacted in any way, if they take a withdrawal from the 401k plan, they're not going to have to pay the 10% penalty. This is a huge, huge benefit for you. Now, the employers also get a benefit too. Now, I know of a lot, because this program is actually voluntary, meaning that you don't have to let someone take withdrawals from the plan. Each plan is written differently for a 401k. So some plans don't let you have loans. Some plans do not let you have money out of your 401k unless it's a rollover to another qualified plan. They won't let you take a withdrawal. But these are voluntary. One of the ways that the Treasury has made it to where the employers are off the hook is they also stated in the legislation that if you're an employer, you can rely on a plan participant's self-certification that they meet these requirements, that they are a qualified individual. So you don't have to play doctor and determine, or detective, and if you're an employer, and determine whether or not someone is actually qualified to do this. Your employee just comes up to you and says, I'm qualified for a CRD distribution, a coronavirus-related distribution. You give them the paperwork to sign it, and they take off with their money. Now, we're going to talk about the next really great benefit. The next benefit on this list allows you to actually take out a lot more money from your plan and loans than you're able to before. And if you are just have your hours reduced and you're still an employee of the company you work for, or if you're furloughed and they still have you on the employer rolls, you can take a loan from your 401k rather than a withdrawal, and you can avoid being taxed on that. So when you take out a loan from the withdrawal, it's your money, right? So you are paying interest on the loan, but it's your money. You're paying interest back to yourself, back into the 401k, minus a few small fees in there. So if you are furloughed and not laid off when your employment is not terminated, it's better for you to take a plan loan if you can. The benefit of this legislation is that plan loans from 401ks and other employer plans that have loan provisions have been increased for qualified individuals. So the same requirements that we talked about before for a coronavirus-related distribution now applies to loans as well. But now, instead of taking $50,000 loans was a maximum before, now you can take up to a $100,000 loan or 100% of the participant's vested account balance. So before, that was $50,000 or 50% of the account balance. Now it is $100,000 or 100% of the account balance. That is a huge, huge benefit, particularly for people who are furloughed and have had their hours reduced or had their hours reduced, right? So, meaning if you take this loan and then a few months from now you go back to full salary and full benefits, you can pay back the loan over time, over 5 years. It's your money you're paying it back to yourself, you're paying interest to yourself, and after 5 years everything will be paid off and there'll be no tax consequences whatsoever. So a qualified loan a qualified loan applies to any loans taken within 6 months of the enactment of the bill. The bill is enacted on March 27th, 2020. All right, so you got 6 months to do it. All right, so the final two benefits, I'm just going to go through real quickly. Waiver of the required minimum distribution. If you are over 72 years old, you don't have to take your required minimum distribution. It would actually be crippling. I mean, your account balances were a lot higher on December 31st of 2019 if they forced you to take a withdrawal on that number now when your accounts may be down 30% or more. This could be disastrous for your long-term plans, right? So they're waiving the 2020 required minimum distribution plan. And finally, inherited IRAs are actually covered under this new legislation for IRAs. So you can still take penalty-free withdrawals from your inherited IRA even if you're under 59 and a half, even if you're not under like a periodic distribution plan or anything like that. So there you have it, guys. That's the changes in legislation. This is only going to be temporary. It's only through 2020, but it's there to help you guys get by in this time of need. Thank you very much for tuning in. Please don't forget to hit the subscribe button, and I'll see you guys tomorrow.